But the most popular companies among WallStreetBets traders are still virtually banned, with Gamestop at the top. Their shares plunged 31% on Monday to $225. It's a war of attrition, and so far private traders are winning, so the Citron Research Fund has admitted it closed its positions with a loss. What if the regulator decides to shut everything down? In the WallStreetBets community, they say that hedge funds are suspected of illegally covering their short positions. Welcome to the Coin Post. The S&P 500 is rising again, silver is plummeting, and Robinhood continues to restrict stock trading and attract financing to keep the business going. The traders' battle continues on multiple fronts, and it's too early to say that one of them is taking over, yet the confrontation is at the ideological level, as ordinary people are against hedge funds, while the regulator stands aside and only shrugs. That's what we're gonna talk about today. And we're also gonna figure out the impact the traders' war can have on the stock market. So give us a thumbs up so that more people know the truth about the WallStreetBets hedge fund battle. And let's get started. I suggest that we sort everything out by taking the summary of news from the front. Now, various financial channels are expecting the regulator to come and get everyone the hell out. So far, it's not happening. The media reported that the Securities and Exchange Commission is closely monitoring the situation and is concerned about the increased market volatility. However, no one's been punished for manipulating the market yet. Maybe because, in fact, neither side has made these manipulations yet. And we don't take the cryptocurrency pumping into account, as it's more of a wild west there and you can do whatever you want. But we'll talk about the consequences at the end of the video, and in the meantime we're looking at the latest updates. Robinhood initially restricted trading shares for 50 companies, which could have put hedge funds in a quite uncomfortable position. Now it's gradually removing restrictions, reducing the list to 8. But the most popular companies among WallStreetBets traders are still virtually banned, with Gamestop at the top. Their shares plunged 31% on Monday to $225. This is good news for hedge funds, but Robinhood can put buying restrictions in place. However, they can't take what's already bought. Within the community, they encourage continuing holding shares because hedge funds need to reduce the price to at least $40 per piece. And still, they won't make any profit. It's a war of attrition, and so far private traders are winning. So the Citron Research Fund has admitted it closed its positions with a loss. Melvin Capital Management has some serious problems too. They urgently requested $2.75 billion in funding to continue the work. The Robinhood is not doing better either, as it needed another $2.4 billion in funds. So far, it looks like WallStreetBets is losing ground. Cryptocurrencies have associated pumps with probably completely different people behind them. So it resembles a classic pump and dump strategy, leading to hamster's bankruptcy. And the spectacular silver rise was followed by a sharp fall. Maybe they're just not coping on all fronts. Maybe they're just making money and there's never been any ideology. Here's one of the recent posts in the community where they already justify the sale of GameStop stock by the organizer of all this action. Like, he never promised to hold them forever, and it makes sense. Everyone wants to take the profits, which could be millions of dollars, depending on the amount of shares on his hands and the point of entry. But there is an ideological problem. The GameStop pump started under the slogan of saving the business from hedge funds that are going to bankrupt it. Only then came the second slogan about the war of private traders with large wallets. So this is what the situation looks like now. And you don't forget to subscribe to the channel to get new videos first. There's more and more of us each day, and I mean, that's awesome. So thank you for your support. And now, let's discuss the consequences. So how serious is the current situation for markets in general? If one side suffers a crushing defeat and it's the hedge funds that are now in trouble because they are suffering loss, That is, there's a probability of a wave of bankruptcies that will trigger panic sales, and then we will, at best, repeat March 2020. Although, according to the billionaire investor Jeremy Grantham, such bubbles must be deflated by at least 50%, so things could get even worse. One might add that Janet Yellen, the new US Treasury Secretary, continues to fear a recession, while the Republicans oppose Biden's new fiscal stimulus, asking to cut it at least half. What's even more weird is that, in theory, we're living in a time of a blue wave, and if Biden and the Democrats really wanted to inject another $2 trillion, they might have just ignored the Republicans. I mean, let me explain. The vice president's vote is the casting one, and the Democrats have the majority in both houses of Congress, but instead of a vote, Biden offered to negotiate and agreed to postpone, and that I find weird. And now, the biggest fear of the day. What if the regulator decides to shut everything down? In the WallStreetBets community, they say that hedge funds are suspected of illegally covering their short positions. If that's accurate, the SEC has every reason to destroy these funds, as well as the brokers providing services to them. The Robinhood CEO is already expected to testify before Maxine Waters' panel. But you gotta understand that such information has yet to be confirmed in court. But can the regulator restrict WallStreetBets activity? Suppose they accuse a particular public channel of manipulating the market. And then, even if it shuts down, the trader community would get together in a new Reddit branch or on a different platform in just a few hours. The only option is to ban social media from any financial information. And then the coin post will have to be banned too. And I don't believe in that outcome because, at the very least, we could migrate to some alternative decentralized social platforms. Google and other companies would want to be on our side here too, as they don't need to lose such a huge content market either. What else could they do? Punish traders for buying or selling specific shares? This is nonsense. WallStreetBets has demonstrated how much capital the private investors have in the stock market now, and the numbers just increasing day by day. If they leave, then a bubble called the stock market would face an inevitable and painful death. The only weak link in those who organized or indeed offered to buy back Gamestop shares, they have or will soon fix their positions and may well be accused of market manipulation. And it's not about hedge funds that got a haircut like hamsters. It's just that the stock price is clearly manipulated for personal gain. I mean, it's not an accusation, it's a paradox because you can't defeat hedge funds alone, but whoever called for unification is guilty of the pump. Share in the comments on whose side you're on, funds or private traders. And do you think that WallStreetBets acted only for their own benefit? Don't forget to give us a thumbs up. YouTube algorithm loves it. And share this video with your friends and those who wanna sort out the situation. And that's it for today. Thanks for watching. It's the Coin Post channel. Subscribe and get enlightened.